The devastating effects of the Christchurch earthquake are yet to fully emerge. However, the significant loss of life and the significant loss of assets are going to be an issue over the coming few months. The economic downturn is likely to see some minor effects over the coming few months. However, we are already seeing a big correction in the New Zealand dollar, which has fallen around 2 cents since Tuesday morning. Currently, we are trading at 74.30 against the US dollar, although we have seen Moody's, the rating agency, come out and assure investors that they don't expect to see any significant changes in New Zealand government finances in the short term. However, the global environment has also been weak over the past 24 hours, with the tension in the Middle East at the forefront of most investors' minds. We have seen oil increase once again, and currently it is trading over 110 US dollars per barrel. While we look at some of the horrific pictures that are coming out of Christchurch, it is easy to see that we are going to see some massive impacts on lives as well as on personal properties. At this stage, it is too early to tell what the full economic effects are going to be, but of course we are starting to do some estimates. We're going to see a downturn for the New Zealand economy likely through the early part of 2011. And the only pickup is going to come through the Rugby World Cup and some potential reconstruction. Although it's hard to see and look ahead to reconstruction at a time when there is so much to do in Christchurch just to try and save some more lives. At this point in time, we are also going to be looking at what the Reserve Bank may do. We are picking a potential downward stretch for the official cash rate over the next week, depending on what they see is happening in the New Zealand economy. We will be watching the wires pretty closely over the next 2 weeks to see if this does happen. Meanwhile, in other parts of the world, it does look like international land prices remain very, very strong. However, at the moment, the supply fundamentals are really impacting on the market, with limited supply coming out of New Zealand, Australia, and out of the European Union. This is impacting on the market, as reports out of the UK are suggesting that consumption levels are starting to wane in some of the key markets. This is a result of the high prices that have started to flow through to consumers, while other competing meat products are at fairly low levels in terms of prices. However, international markets remain strong, and we are picking that local schedule prices will look pretty good over the next 1 to 2 years.